It does take us to our talk of the tape, why stocks are still likely to rise in December. Let's welcome one of this country's top private wealth managers, Cheryl Young, the Rockefeller Global Family Office, with me here at Post 9, a member of the Barron's Hall of Fame, put there in 2023. Welcome back.
Thank you, Scott.
You feel pretty good about the markets where we are?
Not especially, actually.
No?
No.
Well, you hesitated there. I thought it was maybe a rhetorical question, but you say no. Why?
Well, you know, I'd like to think I'm a good luck charm. The last two times I've been on your session, the markets have hit their all-time peaks. So
all right, well, we did again today.
Looking good again today. We're trading at pretty high multiples, Scott, and the last time we saw these numbers was in around March 2000, and that makes me a little bit nervous, honestly.
Okay. Goalposts have moved, some say, though, with the results of the election. Economy's still good. You're going to get deregulation. You're going to get a re-upping of the tax cuts in some form. What some would suggest is a friendlier business environment. Doesn't that justify where multiples are if you get higher earnings to match all of that?
If there's a big if, you get higher earnings to match that. That's the question: is can the earnings continue to expand going into 2025?
Are you doubtful?
You know, I think you have to be careful because if we look at when Trump took, the presidency last time, 2017. The P ratio on the S&P was trading about 18.5. We're trading over 25 right now as we speak. Forward looking next year, 22 and change. And, so I would argue that we're about 44, 45% higher than when he took office last time. So it's not the same market.
So what does that mean? I mean, what do I want to do then as a result?
I would just be adding a little bit of hedging at this point. I mean, I'm a wealth manager, so I don't want to just sell all my mega cap stocks. And,
right.
and as you know, technology is about 44% of my portfolio.
Hedger.
I love hedging.
What's the best way to do it?
I right now am selling at-the-money calls in a lot of my mega caps. I'm using some of those proceeds to buy into small caps financials. Financials are up about 13% since the election, so it's getting a little bit rich there, too, for me. I think healthcare is the only area that's really lagged. It's down, almost 4.5% since election. So you can make an argument, time to look at some rotation.
So you think that the broadening trade, if you want to call it that, which so many areas of the market are up, especially since the election. It's hard to find sectors that have really lagged, and maybe they've lagged for a reason.
Yes,
Are they the ones to really lean into? For the new year?
You have to be careful there. Healthcare tends to struggle before elections. It's happened pretty much every time, but I think the last 3-4 elections. And so they're cheap for potentially a reason. However, compared to the S&P, maybe a little bit less cheap. If I look at the Mag 7, all but one is trading well above the S&P. There's one bargain out there. I can't call it individual names, but there's one trading below.
All right.
We'll
do our math and try and figure out.
We can do our math to figure out that one.
I think I have an idea, but I won't bring it.
But if I look at the spread, you've got 20p on the low end, you've got 163 on the high end. So that's a big spread on our Magnificent Seven in terms of where they're trading. So you can't say everything's equal, right? This is a market where I would be a stock picker, not necessarily an indexer.